Good morning, everyone. How are you doing today? Michael Zuber, author of One Rental at a Time. And this session where I go over a series of questions. I use questions generally to buy us about 15 minutes so that you can go ahead and put in comments your questions. This show, 8 a.m. Pacific, every Saturday, is for my audience. Whether you are a daily viewer on my live streams at 7:30, a casual viewer of the channel talking about real estate, or you just want to ask somebody an opinion about real estate investing or whatnot, this is for you. I like to do these once a week live because it allows me to go deeper. It allows me to take a question and really ask questions back. Sometimes as somebody who's trying to help, I don't get that back and forth with you. It doesn't allow me to really make sure I understand your questions. Something you will realize as somebody who's trying to help is everybody has layers to their questions, and it's easy to assume what's going on. So before we get started, just a heads up, if you don't know, this is Jimbo. He is my 15-and-a-half-year-old Shih Tzu. He is not feeling well. He no longer walks. So I have to carry him everywhere. I am going to try to put him to sleep on my shoulder. We will see how this works, but he's a little fidgety this morning, so we will see what happens. So again, we are going to go through the questions I have, and we'll see what questions you have in about 15 minutes. Again, I generally do these first come, first serve, so if you have questions, start putting them in. Hey, Nathan, Mike, thank you very much. Your question will come first. So first question of the day. I put out a video earlier in the week talking about the 2021 market changing already. Now, this is obviously the real estate market. And I put that video out because, frankly, I've been suggesting, pontificating, guessing that this was going to happen. You can go back and watch past videos, and I'm highlighting that, what we're going to start to see is we're going to start to see inventory creep up. So first off, that video helped a lot of people. A lot of my students, I kind of took quotes from their messages or their posts in our private Facebook group as validation, really to encourage you, if you're thinking about real estate investing, now is the time to learn. And a lot of the comments back were positive and all of that, but a couple of them were like, hey, Michael, inventory is going up, but prices aren't moving. What up? What's the deal? Well, I'm sorry, real estate doesn't move as fast as stocks. So let me do a better job of playing the dominoes out for you, because again, I know I've said the 2021 market's changing. I've said inventory is going to creep up and then deals will happen. I may have done it myself a disservice by not connecting the timeline. So let's fix that right now. We have left 2020, which is a year of low inventory, remarkably low inventory. It's the only reason Vegas is up, I don't know, like 10 months in a row, right? So we just must appreciate where we are. But this is what's going to happen across the country is most markets are going to start to see inventory rise. And that's what you saw me talk about or share earlier in the week. What is going to happen from there is as inventory rises, it's going to eventually get to a point where demand is less strong. Because right now, every reasonable price property is getting 4, 5, 6, 10 offers. So as inventory rises, you're going to start to see the best properties still fly off the shelf. But here's the trick. What you are going to start to see is you're going to start to see the problems that are less than perfect. And this is where deals are made. Maybe it's not a turnkey. Maybe it's not clean. Maybe it hasn't been updated. For example, I think earlier in the week, Omar walked us through a property in Southern California that hasn't been touched since the 1970s. We're talking shag carpet, green or pink or whatever it was. Those are the kinds of things that aren't going to go in a market with rising supply. I'll tie this into another question I have below just to keep it in here. In that video about 2021, I said, look for properties that are staying on the market longer. Not only they will have condition problem, but maybe they will have functional obsolescence. Somebody asked me, well, what does that mean? Just think odd configurations, right? Today, right, you walk in generally, living room, maybe the kitchen's there, maybe a bathroom there, and down the hallway is the bedrooms. Kind of normal. Functional obsolescence is they did not build homes the same way back in the day, and they certainly didn't remodel or add homes back in the day. The greatest example of a functional obsolescence is when you have to walk through a bedroom to get to another bedroom. That is not normal. That still counts as two bedrooms, right? Bedroom one, bedroom two. But if you have to walk through one bedroom to get to another bedroom, that is functional obsolescence at its finest, right? It doesn't meet normal or today's kind of traditional configuration. So that's an example of functional obsolescence. In that same video, I talked about marginal inventory or marginal areas. Again, as inventory rises, you're going to see stuff stay on the market. Maybe it's the 1970s untouched. Maybe it's functional obsolescence. The third one is going to be marginal areas. The biggest example of this is, hey, you have a nice area, but there's like one main busy street. Think 2 or 3 lanes, 45 miles, or maybe it's 35 miles an hour, no stop signs, just zipping along. That is not going to play to the entire audience. You know, if you're one street over, everybody wants it. But if you're on the busy street, that's generally not going to speak to somebody with young kids. They're going to be like, nope, not going there. So the ones in marginal areas, or the ones near the liquor store or near the car dealership or whatever, you're going to start to see those not sell as quickly and likely need price drops. So that's what I mean by marginal areas. So hopefully I've answered that. So going back to 2021 changing, the only way we're going to see prices get soft is if inventory goes up. The other one is if demand falls, but that's just not going to happen. So that's where the deals are going to be made. You're going to be able to find deals where the normal buyer, the normal owner passes. Outdated, functional obsolescence, or marginal area. That's my opinion. So that's where I would be looking. So hopefully that makes sense. Oh, last thing, timeline. Inventory is going to be rising for the next 6 months, at least. As inventory rises slowly, it's not going to really impact demand. So prices will still go up. They may go up less fast, but they're certainly not going to turn down. What you will see as inventory rises is days on market will extend because of those odd properties extending. What will happen in the summer is going to be interesting. Will we get that doubling of inventory because everybody wants to sell? Or will it just kind of peter out because people are staying? So that's where I'm going to be looking. But in the end, if you're looking to invest in real estate in 2021, it's certainly going to be easier than 2020, right? We're going to have more inventory, more opportunities to do deals. One sec. All right, Chatterbox. You just want to be a pain today, huh? Yeah, you want to say hi? There. Hi, everybody. All right, try to go back to sleep. He really hurts my arm when I do this. Anyways, so I think we're going to be months and quarters in this. I do think if you're learning your market, you're going to be able to find a good or great deal this year. 2020 was tough, just no inventory. So that's hopefully makes sense. It is not going to happen overnight. A couple of more houses doesn't lower prices. You know, we're going to need dozens just in your little search criteria. So hopefully that makes sense. Next up, so I released a course last Saturday. I got a couple of questions about, hey, I got your existing course, or I'm thinking about it. Which one do I get first? Blah, blah, blah. So let me just clean that up. First and foremost, this is a real estate channel. One rental at a time is about my real estate investing. If you're thinking about real estate investing, you know, how to get started one rental at a time is the story for you. It is how to do the homework. It is how to do the work. It is how you're going to find a deal in 2021. The second course I just released has nothing to do with real estate investing at all. It's about understanding your family finances. It's about encouraging conversations of money and spending and things of that nature. It introduces concepts that I think are important, like the financial health score or freedom dollars. Those two courses are not related. So if you're thinking you have to buy both to get my real estate experience, don't. Not at all. In fact, a lot of the real estate investors I know don't even need the second course because they've already have the money saved, or they're already having a budget. They're already having those discussions. So the courses aren't related. I'm not trying to sell them as A and B. It's just, as I look at helping the middle class the next 50 years, I realized that a lot of folks, maybe not folks in real estate investing, but a lot of folks need to have a honest assessment of their budget, an honest assessment of opportunity cost, and just more there. So they're not related. You don't buy one and buy the other. They're not connected. I'm not trying to, that's not who I am. I'm just trying to fill a need. So hopefully that makes sense. And just so you know, I actually have a third course. It's free. It's absolutely free. Same spot, links below. It's called, I just changed the name to Protecting, Growing, and Strengthening, something like that, the middle class. I'm going to be adding more and more content there and guest speakers. So really have 3 courses. Free, $99, sort of budgeting, actuals, and $199, the real estate course. The only one that gets access to the private Facebook group, just to wrap that up, the one that I'll be talking to at 9 a.m., is the How to Get Started One Rental at a Time, because that's all real estate all the time. There you go. All right, next up, little help. So I'm reading a question. It's a little bit long, but let me get it. I'm doing my work. I know my minimum yield. I find a deal. Then I look back 2 years and realize I'm paying 20, 30, 40 grand more than somebody bought it for 2 years ago. And then I get nervous about price, like I'm overpaying. What do I do? First of all, don't do that, right? That's not helpful, right? If you're going to go back and look at 2 years ago and be dissuaded by a 20% or $20,000 price drop, let's at least look at the entire picture. What was interest rates 2 years ago? They were higher. What was your payment? Lower price, higher payment, less cash flow. So again, don't do that. It's not helpful. You know your minimum yield, find a deal, execute. I do not recommend looking back 2 years. But if you are going to look back 2 years, look back entirely. It's not just price, it's payment. Lower price, higher interest can actually mean higher payment. So that's one thing. Man, Jimbo, you're being a pain today. You'd think he'd be asleep. We've been up since 2 a.m. He is not feeling well today, I guess. Yeah, I know. The other thing to talk about is a lot of people are nervous because I think interest rates will go up. Interest rates can bring prices down or values down. And that would affect payment, right? But what I want you to know after doing this for 20 years is rent is sticky. So when we had that big price drop in 2000, whatever, 7, 8, 9, rents were sticky and actually went up if you were in houses, if you had houses. So again, if you're fearful of a 10% price drop in your area, I would tell you, do the math, right? Do the work as I talk about, look the numbers. And just, I think that was a homework assignment I gave my students a couple weeks ago. Okay, take your price 200 grand. I'm making it up. Lower the price 10%. Raise the interest rate a full point. Keep rents flat. Raise rents $50. See what happens to yield. This is all a yield play. I'm not teaching appreciation. I'm not talking about buying at a discount. I want to know how hard my money is working and go from there. So hopefully that makes sense. Again, rent is sticky. If values fall, that doesn't mean rents will fall. They're not correlated like that. In fact, I think prices are going to go up now and then rents will follow, right? Again, they're not correlated on the way up. They're not really correlated on the way down. So hopefully that makes sense. Got a question about leveraging a 401k loan. First and foremost, if you have a 401k, you need to check with your company to see if they do this. But many companies, if you have more than 50 grand, will allow you to borrow up to 50% with a maximum, I think, of 50 grand, I think. But again, check with your provider, your company, all of that. The question is, hey, I'm thinking about doing a 401k loan. The market's kind of toppy. If I do this, I can buy a house and pay myself back in a year or 2. What do you think? First off, if you've read my book before, I did this every year for 3 or 4 years. Wow. And so I'm a big fan. But you do have to have some caveats, right? You need to feel secure in your job. You need to think if you're going to be there for a couple of years, because very few people can take a 401k loan of say 40 grand, and then 6 months from now they leave their job. That loan comes due immediately, or within, I think it's within 90 days. Again, check with your plan. So you need to either replenish that 40 grand or you're going to get a tax and penalty hit. In the CARES Act, I think they did do you can borrow without the penalty, but I think there's some paperwork and requirements. So go look that up. But in the end, I'm a fan of 401k loans. It was the cheapest source of capital. I used it a lot when banks wouldn't lend to me. Big fan. Next, private money and buying in your IRA. So again, 10 o'clock this morning, so in about an hour and 45 minutes, you will see a first of likely many interviews with a IRAclub.org. I think it's Dennis Fitz, Dennis something. And I think you're going to get a lot out of that. And again, we will do more of those. But in the essence, I've talked about many times, I've done private money loans, raised millions of dollars. Actually, in my course, How to Get Started, One Rental at a Time, I just started adding private money. And one of the sources is people's IRA accounts. I think in total, I've borrowed $1 million, maybe $1.2 million from IRAs. And here's the deal. The IRA is like its own entity. You will create a note. The note will be in the IRA's name, Michael Zuber, IRA, blah, blah, blah. I shouldn't say Michael Zuber because I can't loan to myself. I don't know, Bill Smith, IRA. And you'll have a note and you have a payment and all of that. There's all kinds of rules with the IRA. Like when I pay the bill every month, I send a check to IRA Club, for example. If I do my 6 and 20 program and I have to send profit, I send it to the IRA. So, lots of ways to do that. Again, that video goes live at 10 a.m. I think you will see that. It was very interesting. And sorry about Jimbo this morning. He is just not happy. Come on, man. I'm trying to talk here. What are you doing? And I don't want to give him to Olivia because Olivia is not a morning person. She will be very cranky. Starting over today. What would I do if I was starting over today in today's market? And this is actually going to tie into a video I built this morning because, again, I've been up since 2 a.m. I built a video about making money in a Joe Biden administration. So that's coming out later. I've got it built. I just haven't recorded it, but it will be out today. It'll probably post at 4 or 6 tonight. But basically what I would be doing is I would be trying to get as many 30-year fixed rate mortgages as I can in the next 2 years. I'd borrow from a 401k. I'd get loans on cars. That's because, as you'll see in my video later, I think inflation is coming and higher interest rates are coming. So my job would be to get as much cheap 30-year debt as I could. I'm going to be talking about the stock market, multifamily, and single family in that video later, because I think the series of events will impact those 3 things differently. So you will see that in a minute, or you'll see that later today. Again, I would just focus on houses. I wouldn't be in a rush. And again, I'm talking residential loans. So in theory, it's 4 plexes and below. I would not be in a rush to do multifamily. I think multifamily in many markets has some pain. Again, in my market where I'm at, I have these assets today and rent collection's down. People fighting or, trying to get free rent is up. But houses are hot. People want to live in housing. So it is interesting. Next. So Gavin Newsom, lovely. The only politician I name, because I can't stand him, pretty boy, likes to hear himself talk. So just yesterday, Gavin Newsom approved stealing of money from mom and pop investors. I talked about it earlier in the week. It was coming, but now it's law. So essentially, Gavin Newsom is forcing mom and pop investors to give people 2 months free rent a year. Yes, Gavin Newsom is a crook. He's a thief, not a nice person. Basically, what it says is, hey, if your tenant's been late and they meet certain criteria, we will pay 80%. So for example, I have that tenant that I've talked about that's down 20 grand. Here's the deal. Let's just use that one example. apparently I will be able to very shortly, or my property manager will be very shortly to be able to fill out paperwork that says, so-and-so hasn't paid rents from here. Here's the books, blah, blah, blah. And the state will send me a check, or again, my property manager, a check for 16 grand. Here's the catch. I have to eat $4,000 because the state is only going to pay 80%. And you, mom and pop landlord, you have to eat the rest. How criminal is that? There's a contract in place. This is, I think it's in the Fifth Amendment, talking about can't break contracts between two people. Just so irritating. But yes, that's Gavin Newsom taking from mom and pop investors. And he goes one step further. If mom and pop landlords don't want to do that deal, that he will come in and pay the 25% minimum so that we can't evict these tenants until June 30th. And again, who knows if June 30th will be the last extension. Just not a nice person. He's essentially put a gun to the head of mom and pop investors and said, blink. Not a good dude, not a nice guy. And this is the guy with a $5 billion surplus. Not a $30 billion shortfall, but a $5 billion surplus. This is the guy who has ran the unemployment for the state to $11 billion in fraud. He needs to be recalled. It is not good. So I already hit the functional obsolescence. And I think that's it. All right, let's scroll back to the top. All right, folks, let's see if we can get through all these. Mike, or Nathan, good morning. How are you, man? Mike, good morning. Question: what are the best ways to find wholesalers in a new market area you are interested in? I would go to as many real estate meetups as I could. I'd go to Bigger Pockets. I would just be open. Investor looking for wholesaler in market X, Y, or Z. Wholesalers, if they're any good, don't hide. Wholesalers are always looking for buyers. They're trying to build their buyers list. They never stop. So that's what I would do. Also network with wholesalers because they know each other, right? Talking to a wholesaler, who else you have, right? Who else is out there? You can also talk with other landlords, right? Just basically ask. So like if I was going to go learn Dallas, Texas or something, I would post in Facebook. I would post on Bigger Pockets. I would go find, you can just do a search for wholesalers out there. It should be pretty easy. Now that's not going to tell you any quality because not all wholesalers are the same, but that's where you would start, and then you would start, doing your criteria from that. Hey, Miguel, how are you? Nathan? Yeah, Jimbo's giving me a hard. He's stressing me out today. I'm trying to do good. I just don't know how sensitive this mic is. Hey, Arby, how are you? Good morning. What is the best way to get garbage back from tenants? What? Oh, garage back from tenants for ADU. Oh. That's interesting. I've not done that yet, but essentially you have to change the lease. Again, work with an attorney, work with your property manager, but as I understand it, you signed that original lease with your tenant and it included the garage. So you as the owner have a binding contract. So the lease has to change. So it's all about the lease. And you'll likely have to lower rent because you're taking away an amenity. So yeah, that's where you start. It's all about the lease, and then once the lease is signed, rents are you've done the trade. That's where you go. So you may have to, if the tenant doesn't want to, it's like, no, I need the garage for my office or my car, or I run a daycare out of there, or whatever happens. You actually may have to evict the tenant or give them a 60 or 90-day notice or whatever it is. So there you go. So yeah. It is all about the lease, Arby. Mike, that multifamily rents are going down. Is that all markets, select markets, Fresno? Well, I think what I've said is, or what I meant to say is multifamily rent collections are going down. Rent collections are going down. So your net is certainly shrinking. I think that is in most markets. I don't know all markets. I never pretend to know all markets. But when I talk to other landlords with multifamily, they all admit that rent collections are lower than expected. So the big urban cores I report about all the time, their rents are down, but that's no secret, right? San Francisco, New York, Chicago. I don't think most markets rents are down. Fresno rents for apartments are flat. I haven't lowered rents in an apartment. They're flat. But houses are up about 10%. What are you doing? So again, that's what I'm seeing. So again, rent collection is what I meant. If I said rents or misled you, I apologize. Rent collections are down in multifamily. Houses are pretty good. Rents are flat in multifamily in Fresno. Houses are up. Okay. Yep. Nathan, how are you this morning doing work? I noticed a good deal that went from coming soon to pending in 24 hours. Well, Nathan, congratulations. 6 months ago, you probably wouldn't have noticed it, my guess. So that's progress. Second, inventory is at least hitting the market. A year ago, that probably would have never hit because the deal would have been done in-house. So again, I think the market's changing. It doesn't change as fast as you or I want. It's not the stock market, but keep doing the work. I want to applaud you for identifying it. That's a huge step forward. Miguel, question 2 part. Okay. Proposing an owner finance deal, can you pay market value for a property but still have a good deal if financing works? Absolutely. I.e., interest only, more cash flow, 15-year, low down, high yield. Absolutely. Miguel, go back to my YouTube channel. I did a homework assignment for my students that basically said, can you overpay by 10 grand and still get a great deal, not only a good deal? And the answer is absolutely, right? Not only can you do interest only, but you can do a really low interest rate. Like what happens if you did a 1% interest? What happens if you did, 0 down? So yeah, let me think about this. I don't know. I've done, a dozen, maybe 15 seller finance deals. And I think all of them I paid what the owner was asking, because for me, the terms were far more important, right? My intention when I buy is to hold forever. So I will pay market value or what the owner believes market value is if they give me my terms. So yes, 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 yes. Hey, Jerry, how are you? Ultimate Bargains, Jeffrey. The only houses that I'm seeing are too long on the market have been very high asking prices beyond what nearby competitors are selling for. They are excellent condition with too high price. Well, that's a start. I think that's different than last year. Again, what I'm seeing in markets is, I think I said this, more inventory, but I've called them stupid prices, right? Stuff is coming out and they are just overpriced, but that's the start. You get 10 new listings, all of them are overpriced. 2 or 3 will sell because they're the right location, the right quality. Somebody wants it that bad. The other 7 will stay longer. 2 of them will come off because it was just some owner that was looking for a price. The other 5 will have a price drop in 60 days. And that's the trend we're waiting for. It doesn't happen as fast as we want. Question, Miguel. Who do you use for payment service company on how you make payments to person doing finance? I don't use a company. I write the check, or I do the Zelle payment in Wells Fargo. Yeah. Tamika, progressional rooms are normal for older homes, rooms off other rooms rather than, all hallways. Yeah. That was very common. And I have those in many of my older homes. I didn't know they were called progressional rooms, though. That's a fancy term. Progressional rooms. Okay. I like it. I learned something today. Thank you. Thank you, Tamika. Come on, buddy. Just give me another 20 minutes. Miguel, Arby, I would offer them a monthly discount. Yeah, that's back to the garage, I think. Yeah, you're gonna have to get a new lease at a minimum. Yeah. I'm seeing the same things. Houses also in the same price, but in original condition, not selling either. Folks, this is what, if you're a student of mine, this is what I'm hoping you're seeing, right? You're doing the work. You're recognizing these subtle changes. If you're not one of my students, you're not going to see that. Or if you do see it, you won't know what it means. So I'm very, very happy that my students are saying these things. Yes, don't forget to hit the thumbs up. After all, I'm struggling with this guy. Help me out a little. Yeah. Smash the like button. What do we got? Yep. Yeah, Dennis Splits. Yeah, IRA Club. Yeah, Mike, I think you made the introduction, so everybody give Mike a thumbs up. I think Mike's the one who made a connection to Dennis, I think. If not, I'm sorry, Mike. Now you got credit for something you didn't do, but I think you did. That was a good conversation. I liked him. Yeah, he was a good guy. Knew his stuff. Vero, love seeing the baby. He's part of the real estate family. Yes, he is, but just like all babies, sometimes they stress you out. Hi, buddy. How are you? Yes, Tamika. Life insurance policy with paid up addictions is another loan option for those with properly structured whole life policies. Huh, I've never seen that. I have to look that up. Jerry Davis, he's a crook, needs to be sued. Oh, yeah. Gavin Newsom, bad dude. Yep, mom and pop, that's not cool. Creative financing deal. How do you feel about seller offering to make major repairs rather than hiring? Well, I don't feel good about just a general homeowner making major repairs, but I don't know them. Maybe they are a licensed contractor or handyman or something. I generally would want the work certified. So if they want to do the work, he's going to have to pay for an outside vendor to certify or check or whatever. When buying an asset, I don't trust the seller, right? I trust but verify. So for example, on your property, all the windows had to be repaired or replaced. Goes and does that. I would tell him he owes a $500 inspection fee. And if they come back fine, great, all done. If they come back with, hey, insulation not done right, the window's too big or too small and open, I mean, who knows what happens. But it can all be negotiated, but I would trust but verify. Mike, reach out to Keegley Jamil, yeah, and his company have franchise nationwide and dispose 60 to 80 homes a month from wholesalers in the market they're in. Oh, you're talking to the other Mike. I'm going, you're talking to me? Yeah, I've had Jamil on. I did a show the other day. Yeah, reach out to Jamil. They got lots of stuff. Yep, exactly. Trust but verify. Yeah. Nathan's question, what is meant on cash yield? If I pay cash, what is the good return on money? Nathan, don't listen to anybody else. That's for you to decide. In my course, Nathan, you do the work and you'll find a return for your market. In my market, 6%. In Cleveland, Ohio, it might be 10. In Detroit, Michigan, it might be 12. And in San Francisco, it might be 1. So don't let anybody else tell you, because the first thing you're going to hear me is say 6% Fresno. And then you're going to take that and go, oh, I'm going to go buy 6% somewhere else. And then you're going to overpay. It is very market specific. And oh, by the way, we don't know your situation. Maybe you're sitting on, a couple $100,000 in the bank account. You're getting 0.1%. So a 5% yield would be good. So again, I think a yield or cash on cash return is market and investor specific. Asking somebody else what a good yield is only going to set you up for confusion. Because again, I tell you today 6%. That just means you're going to overpay in Cleveland or Detroit or something else. Oh, you can barely hear Jimbo. Oh, that's good. I did not know that. I assumed this mic was more sensitive. Thanks, Nathan. That's helpful. That's actually good to know. Okay, that's good to know. Carlos, is it a good idea to do a home inspection after you have a house under contract? So first off, if this is your first deal, absolutely. If this is your 100th deal, you decide. Second, if you're buying what I would consider a turnkey or not budgeting anything, yes, get an inspection because you don't want to be surprised. If you're buying what I buy, total junk, then I'm going to replace everything. I don't even bother. What are they going to tell me that I don't know? Oh, their subfloor is weak, or there's cracked tile in the kitchen. I don't care. I'm replacing it all anyway. So again, if it's your first deal, always do it. On the first deal, realize that a home inspector is trying to scare you because they want business out of it, right? They make very little money doing the $100 inspection. They make money on the work after. So realize all inspection reports will be written to scare you, the potential buyer. Second, if I was starting out and getting a turnkey solution, I would get a home inspection. Because why? You're budgeting $0 for make ready, right? Remember in the course, it's A, B, C for condition. A is 0 make ready. So if that's your assumption, get an inspection because you don't want to be surprised. But if it's C and you have experience like I do, I don't even bother. Hopefully that makes sense, Carlos. Yes, Jeffrey, you're absolutely right. Oh, Tamika, paid up additions. That makes more sense. Yeah, I got it. That makes sense. Holding Jimbo, yes. My left arm, which is the only arm he likes being in for some reason, and I'm a right-handed guy, so this is definitely working out my left bicep. Thank you for that. That's funny. What would you do if you had money to lend? I have money to lend, but I don't. For me, that's not where I'm at. I mean, some people in life situation, that's where they are. For me, it would be about vetting the borrower. So if I was in your situation or somebody's situation, vet the borrower, then vet the deal, not reverse. Don't vet the deal, then the borrower. Vet the borrower, then the deal. And I put new material in our course for raising private money. Jason Pritchard was nice enough to do a video. So look at what a professional package looks like. That's somebody who's done it. That's somebody who's got deals and they're showing you what you're doing. So again, vet the person, vet the deal, and then the terms is probably where I would go to in that. So that's what I would do. And I would do 1 year or less because you want your money to recycle. I would probably not lend long term. I don't know, maybe. I guess maybe if somebody wanted to do a rental and they wanted to pay me 10%, I might do that. But today's interest rates, why would they? Yep. Oh, Mike, thank you very much. Yeah, he was a very good dude. Very, very good dude. What do you think of Yao Ming? I think he was a very good center for the Houston Rockets, and unfortunately, he had feet problems, as I recall, and was out of the league. Now he has a winery in Napa that I think was hit by firestorms or fire a couple of years ago. How do you figure out yield cash purchases? Do you include taxes, insurance, home insurance, maintenance? Yeah, Nathan, if you buy my course, it's all in there. I give you my exact spreadsheet. But yield is very simple. Cash out of pocket is on the denominator. Expected yearly cash flow is the numerator. Times that by 100%, turns it into yield. Very simple. It's all in the spreadsheet. And yes, you include all of that because it all rent minus all expenses equal cash. Cash times 12 equals a year. That's your yearly number. Okay, Carlos, cool. Yeah, yes, I'm starting to think so, at least for my left arm, Miguel. He's definitely one of my workouts today. Absolutely. That's funny. All right. Any last minute questions? We've done 40 minutes. Again, remember, if you're one of my students, we will do this at 9. Hopefully he's sleeping by then, but we will see. All right, everybody. Thank you for the 40 minutes. Again, I have 3 courses. And remember my positive impact score. If you go and sign up for the free course, it still counts as 1,000 points. And then if you buy the How to Get Started One Rental at a Time, of course, that's 1,000 points. But if you join the Facebook group, that's 10,000 points. And then lastly, if you're one of my students and you close a deal, please let me know somehow, some way, because that is what I'm going for. That's 100,000 points when one of my students does a deal. Take care. Bye.